My name is Stephen Stricklin, Senior Vice President of Wealth Enhancement Group in Lee Summit, Missouri. I'm a certified financial planner, a certified Kingdom advisor, and also a proud supporter of Resource Health. In this video, I wanted to explain a few of the highlights from the One Big Beautiful Bill and how it impacts charitable giving in general and giving to Resource Health in particular. When it comes to charitable giving and taxes, the key thing to understand is how much of our giving can we deduct from our taxable income. And the most important thing to understand when it comes to that is whether or not you are going to take the standard deduction or whether you're going to itemize your deductions. Typically, you will choose the standard or the itemized depending on which one's higher. So let's get started with the standard deduction. For this video, I'm going to use married filing jointly amounts. If you are a single tax filer, you can just generally use half of the amounts I'm going to talk about. The standard deduction in 2025 for married jointly filers is $31,500. So if all the deductions you could itemize is less than $31,500, you will just take the standard deduction. But if you itemize all of your deductions and it's greater than $31,500, you will deduct from your itemized list. Generally, the two biggest numbers that make up an itemized deduction list are mortgage interest and charitable contributions. If you are over age 65, you can add an additional $3,200 to your standard deduction. So instead of $31,500, it will be $34,700. But wait, there's more. Because of the One Big Beautiful Bill, any filer over age 65 will receive an additional $6,000 standard deduction for the next 4 years. So a couple over age 65 this year can add another $12,000 to the standard deduction, making it a total of $46,700. There are some income limits that could phase out that new bonus deduction, so keep that in mind. So if your charitable giving and mortgage interest in that example are not greater than $46,700, then you will take the standard deduction. There is another bit of good news. Even if you take the standard deduction, you are now allowed to deduct an additional $1,000 per person for charitable gifts. So a couple could give $2,000 and still be able to deduct that charitable gift, even if they take the standard deduction. There is, however, a 0.5% floor before charitable gifts can be deducted. If a couple has $100,000 in income, the new deductible amount will be any amount over $500, which is 0.5% of $100,000. So in order to take advantage of the full $2,000 deduction, a couple would need to give $2,500 in that example. The maximum amount you can deduct from your income for charitable gifts is 60% of your adjusted gross income for cash or 50% of a non-cash gift. One strategy to consider is called bunching, which means you do your charitable giving in bunches. For example, if you have a donor advised fund, you could contribute a certain amount every other year or every 3 years so that the amount exceeds the standard deduction amount, so that maybe every other year or every third year, you get a bigger deduction instead of always staying in the standard deduction limits. Finally, Resource Health givers receive another incredible potential tax benefit. Gifts to Resource Health may be eligible for a Missouri state tax credit equal to 70% of the amount of the donation. A $10,000 gift to Resource Health could result in a $7,000 Missouri state tax credit, as well as $2,000 in additional deductions to your adjusted gross income. As always, please consult a CPA or tax professional before making any decisions, but I hope this information will be helpful to you. God bless you. God bless the team and the work at Resource Health.